Today, we'll be analyzing a mutual fund that has good potential upside because of the past underperformance of its stocks. The core idea here is regression to mean. What has underperformed has likelihood of reverting towards the historical average. We first look at the stocks and then look specifically at the mutual fund names, dissecting through three key data points. Portfolio returns are generated through asset allocation, which is buying the right asset at the right time, and then rebalancing, which is selling overvalued stocks or assets and buying the undervalued ones. Nifty Bank stocks in the past 1 year have underperformed the broader Nifty 50 index. Also, severely underperformed other secular growing sectors such as FMCG and IT. More importantly, in the last 1 year, Nifty Bank has underperformed its own long-term average very significantly. Same is the story with Nifty Financial Services Index. It has underperformed the long-term average. Let's look at the stocks in the index. The top 5 stocks account for 80% of the index weight. HDFC Bank. Banks are normally valued using price to book and not price to earnings, but here I am using it to do a relative comparison with its own history. The median valuation of the bank is 27 and the current PE is 18. It is the lowest in HDFC Bank's historic valuation. Whenever the PE has gone down below the median, you can see that it has recovered and gone beyond the median. So if it goes this time also from the current PE of 18 to say 30 PE, that's a potential 60% increase. Also note that the bank's earnings, the light blue bars, have continuously been increasing. If you look at State Bank of India, similar story is playing out. Stock is trading at an all-time low valuation of 8 PE, similar to the previous bottom. If it just goes back to the median PE of 12, that's a potential 50% upside. Kotak Bank, the current valuation or PE is 21 and the median PE is 32. A possible 50% upside here as well. Earnings have been continuously going up and I'm not even factoring that. The profits of the bank was 9,000 crores in 2021. It has increased to a profit of 16,000 crores in 2+ years, almost a 60% increase in profit. However, the stock price was around 1,700 then and the same today, even after a 60% increase in profit. So it's time for the stock price to get its due. Axis Bank is quoting 25% below the median valuation. ICICI Bank is also just below the median. However, the earnings have been growing rapidly, giving scope for stock appreciation. The top 6 stocks that contribute to 86% of the index fund, all these stocks are quoting below the median valuation. And if the PE moves back to above median valuation on the back of continuous earnings growth and give a 25% margin of safety, I'm personally expecting a 25% upside. In investing, we must evaluate options based on probability and not certainty. If you also think likewise, a mutual fund option is the ICICI approved Nifty Bank Index Fund, which replicates the Bank Nifty. It's a new fund launched in March 2022. It has a small AUM of 220 crores. The expense ratio is 0.2% and it replicates the Bank Nifty Index as is. There are options in both actively managed mutual funds and passives tracking both BSE and NSE bank indices and ETFs. Please check the risk profile before venturing out into the investment drives. It's impossible to predict how long it takes for a thesis to materialize. Therefore, it is wise to invest only funds that you can put at risk after keeping away money that is needed for the immediate future. This spectrum helps you analyze mutual fund risk fitment as a thumb rule only. A young investor with stable finances and comfort with market fluctuations means a higher risk tolerance in this green zone. The green zone indicates that the individual falling here are comfortable with taking on more risks in their investments than moderate risk tolerance in yellow zone. When the factors are dispersed across three zones, for instance, an investor is middle-aged, financially stable, but has mixed feelings about market fluctuations, your place could be in yellow zone or the moderate risk tolerance zone. Hope you enjoyed the content of this video. Please do like, share it with your friends and subscribe to this channel.